guys? It's Chris here.
It's your boy Young Equity Devin. Let's get it.
Today we're going to be talking to you guys about recovery plays and some to keep on your radar. So the first one we're going to throw out there, American Airlines, ticker symbol AAL.
Yeah, this is something that I've had in my portfolio since it was sitting at 14. I bought more of it, and then I had an average cost of $15.60. I've written that bad boy up all the way up to around, it's sitting at $20 right now.
Yeah,
so as people continue to get the shot, as people start having less restrictions on going out and mask mandates are available and all that stuff, I feel like people are going to feel comfortable enough to go travel, because when you have that shot in your body, that allows you to go out and feel immune to that situation. So American Airlines is a great play. It's a great recovery play. Do you have any thoughts on that?
Yeah, man, I think it's a great play. I think it's one of the few airline stocks left that still have a lot of value left, because right now, Spirit, a play that I've had, for a long time, that one is close to $37 or more. And that's pretty much getting close to what it was trading for prior to the illness. So AL, to me, if you're looking for an airline play to invest in, that is a good one. So another recovery play, right? Cruise lines.
Oh man, now hold on. I wouldn't advise anybody to actually go on a cruise right now due to the illness, but a great recovery play would be CCL or what play?
Nclh, Norwegian Cruise Line.
Yeah. What are your thoughts on that, Chris?
Well, number one, let's talk about my thoughts on cruises, period. I don't like the idea of a cruise. I know it's kind of hard for me to judge, because the closest thing I've done to a cruise was when I went to Mexico and we just took a boat to Isla Mujeres. And that was, I think an hour boat ride, if that. And nah, I don't like that. I want to be in control of my own destiny when I travel. So cruises aren't for me, but apparently people like them, especially older people.
Yeah.
They love cruises. They talk about the all you can eat and all the drinks. I'm like, I'll buy the food I want and buy the alcohol I want when I land. Then you go to these countries and you can only walk around the country during the day. Nah, man. But aside from my personal feelings about cruise lines, there's a lot of value in these stocks because there's a lot of pent-up demand for cruises. And I'm telling you, once things like the illness get under better control, this will explode. I have been owning and swing trading Nclh for about 20% gains since the illness. So, I've gotten a lot of value out of that stock. But now it's going to move more into the long-term play once that things start opening up, state by state, country by country.
Yeah, and we've talked about recovery plays taking about 3 to 6 months to kind of pop, but it's inevitable that these plays will 2x or even 3x. You just have to give it some time. And kind of like what Chris mentioned, you could take your profits whenever it hits 10 to 20%. There's nothing wrong with that. That is a great gain. And some people want to get rich quick, but 10 to 20% will be sufficient enough.
Yeah, man. And another recovery play is ticker symbol CVS. And this recovery play plays directly into the approvals of more shots. So Johnson & Johnson got approved. I think there's one more company on the horizon of getting approved. And so it's going to be more doses available. And as more shots are available and more people are getting it, it's going to be more walk-in traffic for CVS retailer stores. Because think about it, right? The percentage of the illness in the country is going down, and it's been associated with the release of more shots. And when there are more shots available for people of all ages, that's more foot traffic for CVS. So when I go to CVS to get a shot, I'm more likely to go buy a bag of chips off the shelf or an overpriced Coke or something of that nature. So that means increased margins for them store-wide.
Right. So not only are you touching on the shot market, you're also touching on the retail portion of that. Yes. So that kind of reminds me of, as people start getting those shots, more people will start going out to Walmart, Macy's, and any other retail stores that are available at your location. Is that correct?
Yep.
Okay. That's solid. And it makes a lot of sense. These are great recovery plays.
Yeah, man. So right now, especially with the market correction, I think it's a good time to really start investing in recovery plays again. Treat it like March 2020. Buy the best value. And there's a lot of value in recovery plays. A lot of recovery plays have, recovered a lot of, ground, like Boeing was like $100 or even under $100 at the peak of the illness, and now it's over $200 it trades for. So that's a 2x in less than a year. So these recovery plays have a lot of potential, but you're gonna have to have a lot of patience. I mean, because they could trade sideways for 6 months, 9 months. But when it's time, when it's your time in the sun, those things can pop. So again, I recommend everybody have some recovery plays in their portfolio, at least 10% of their portfolio, in my opinion.
Yeah, no, that's a solid number. Like I said, it's inevitable that these markets will definitely pop again. As the recovery happens, it's only a matter of time that these stocks will start to increase. So just get in on these plays now while you have the chance, because they're at a super discount, just like a lot of plays are at a super discount. But watch out for the airline stocks right now. They kind of had a better week than some of the plays that you had. So as you have that 10% in your portfolio, that could hedge against all the bullish plays or short-term plays that you have in your account. So great advice.
So do you anticipate a supply and demand imbalance in regards to some of these recovery companies? Like, let's say the airline business. Once most Americans feel okay about traveling again, do you think they won't be able to meet that demand and capitalize on all of the people that want to travel now? Or do you think maybe they'll raise the prices to capitalize and make up for lost time?
That's a good question. I mean, I definitely think that these airlines have the capacity to hold any sort of demand, because if you think about it like this, people were traveling at an all-time high last year. You know, you had a lot of people getting involved with, getting flued out, or hot girl this, hot girl.
Even 2020?
Not 2020.
2019.
19,
okay,
my bad.
Okay,
2019,
yeah.
my bad. 2019.
I mean, there is some of that going on in 2020, but I get you.
Exactly.
Yeah.
It doesn't stop people from traveling, the illness, right? But no, I don't think there's going to be a supply and demand imbalance for airlines at all. So that would be my answer in short. What do you think?
Yeah, man, just expect some higher prices on the websites. So a way to kind of get some of your money back is investing in these companies and sharing those profits. So
yeah, I mean, because right now, if you go on Southwest, you could probably travel from Houston to San Diego at around $100, which is very low. So yeah, I mean, I can definitely understand the increase in price, but that's with anything.
Yeah. So just be prepared for that. Just overall with these recovery plays, they're going to be great to invest in. They're going to go up in value, but these same places, when you go to frequent them, prices are going to go up.
We'll go back to normal.
Or up even, depending, right? If you're talking about buying a Coke at CVS, it's probably going to be more than it was before eventually.
Gotcha.
Things like that.
Makes sense.
Because with the money printing and inflation, so.
Yeah, but if you're talking about the airlines, I feel like those prices will at least go back to normal. But if you're talking about retail, then yes, that's a different animal. I agree with you.
Yeah.
Okay.
All right, man. Thank you guys for checking out this video. It's been a pleasure. It's your boy, Young Equity Chris.
And it's your boy, Young Equity Devin.
Let's get it.